Hey everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we're showing you on your screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the chart of the S&P. Good to be back with you. I was off for a while, traveling on vacation. One of the great things about trading, as long as you have an internet connection, it doesn't matter where you are in the world, you can trade. So happy to be back with you. Thank you for the comments of those that were wondering where I was and missing me. So happy to be back with you. We take a look at the chart of the S&P. Some economic news that we had to deal with is we had the GDP print come in negative. Down 0.3%, but a lot of people think when the revisions start coming in and they revise it so many times that it'll go back to positive, but showing a weakening economy. But the jobs market was strong and the wages paid was up. And that's a little bit nervous time when you start to have the economy weaken and wages paid. Those are inflationary, and that brings that S word of stagflation back in. But right now, looking at the chart of the S&P, we're back above all the three major moving averages that I look at, the 10, 30, and 50. The royal blue line is the 50-day moving average. The lime green line is the 10-day, and that fuchsia-colored line is the 30-day moving average. And we have had a bullish cross here, but we are at a point of significant resistance right here at 575. We need to break above this level. So I think you need to be cautious here. There are some people, Paul Tudor Jones was on financial summit that they had. He was on CNBC saying that he felt like we're going to make a new low. Maybe we do, maybe we don't, but there is no doubt that with this rally, we are bumping our head against resistance. We had the breakout of this symmetrical triangle, and we've run up. We need to break 575, I think, to be bullish at this point in time. So if you've enjoyed this move here, don't get too giddy on it. It's not the time to back up the truck or load the boat or whatever the favorite cliche that you may have. We need to break this level. And this 5-wave pattern to the downside is still hanging on. It's still qualified because that wave 4 has not breached 78.6%. But if we break above 575, then this pattern will relabel, and this could be a new impulsive move coming out of this symmetrical triangle. So we're at a point that bears watching as we move into trade next week. Taking a look at the VIX, and then I'll jump into some of the other markets here in the U.S. We did break back below that 22.5 level. Can we hold it there? We're going to have to see where we close on Monday, because remember, you need a follow through or confirmation day. If we can break down below it and hold below it on Monday, then perhaps we are coming down to this next level at 17.5 on the VIX, and that would be supportive of a move back to the upside. But remember, a one-day break means nothing. We have to have the follow-through or confirmation day because the market loves to give head fakes. It loves to fake out the retail traders. That's what the professional traders do, and they take advantage of that when people think, oh, okay, the VIX is coming down, the market's going to rally, and you jump in. But as I showed you on the chart of the SPY, we don't jump in yet. We have to wait and see if we get the break of that level so that we can move to the next higher level. If we take a look at the Dow on the DIA, all these charts are going to see very similar patterns here to where they have resistance levels. Now, we haven't had as much of a breakout on this triangle on the DIA that we had on the SPY, much larger breakout on the SPY. And the wave 4 here on the DIA is right at that 61.8% level. As you know, that's my favorite of all Fibonacci levels. It's the strongest level, in my opinion. If you're a currency trader, then 78.6 is a level you look at, but in the equities market, it's 61.8. And the level here to watch is 425. We need to get the DIA above 425. And as close as it is, you would think that if we do get a break higher in the markets, President Trump has said there's going to be some big news coming out this weekend. Who knows what that may be? We did have the deal announced with the UK, and they had the Prime Minister of the UK on the phone, and the ambassador from the UK to the US was actually in the room. So they got that deal done. He said there's a lot more that he can announce, but something he said is going to come out. I don't know if that was jawboning to hold the markets up or if there really is something of significance that's going to be announced. But don't get caught up in that until we break above these resistance areas. So the point on the triangle here on the DIA is that's not enough of a breakout to say hey, that's a confirmed breakout. That still could be a false breakout. Remember, triangles break out one of three ways. You break out and take off, you break out and come back and test the point of the breakout and then move, or you have a false breakout and the big move is actually the other way. So two of those scenarios are still in place. We don't have a confirmation that this is indeed the breakout yet. The other two are still in play, so we got to keep an eye on that. Let's go and look at the Qs. And we'll look at the bond market in a minute. Then we'll get to the dollar, then we'll get to Bitcoin, etc. But if we take a look at the chart of the Qs, and as I bring the chart of the Qs up, you'll see that we have very similar type patterns as far as a resistance area. It's up closer to 500 here on the Qs, and the moving averages. We have that bullish cross. We're above the 10, 30, and 50-day moving averages on the Qs. I think based on what the bond market's been doing, the Qs have been acting pretty strong. You've probably seen that a lot of the Mag 7 stocks have had bids in them. So that's been helpful and supportive of the market, specifically the Qs. But there's the level to watch here. So we're awfully close to that last resistance level of 78.6 on the Qs as well. So pretty similar to the SPY. But note that we are at a point where all these major markets could turn back and go lower with this five-wave pattern to the downside still technically qualified. So we got to break above these resistance. So on the Qs, if you're looking at that, you want to watch 500. Now as we move to the IWM, and that's something that we talk about week in and week out in our insiders meeting, which is for subscribers only at ewotrader.com. You can see that we are up here at a very important level of resistance as well on the IWM. I think this market has been moving really well in concert with what's been going on in the bond market. And as I talk about the IWM, just a quick reminder that every month this year, we did it last year, we're doing it again this year. Every month this year, we're giving away one free of our level 3 subscriptions, and that's our time strategy, which is looking for sideways trades, taking advantage of volatility on a short option and protecting that with a long option, calendar spreads. We do that a lot. Pretty good time to be looking at that type of a strategy. Our volatility strategy was looking for triangle breakouts, and our AI-based impulse strategy, where we primarily look for zigzags within a wave 3. It's a great way to trade, what all Elliott Wave traders tend to agree on. You know, there's a lot of disagreements in Elliott Wave and a lot of personal speculations on labeling, but the majority agree that wave 3 is the strongest of all waves, and that's what that focuses on. If you look at our website at ewotrader.com, it's worth thousands of dollars. All you have to do to register for the free giveaway is leave a comment underneath this video. So we've been talking a lot about the IWM because it's a little bit of an outlier. You can see that the wave 4 has only gone up just past the 38.6% level here on the IWM. So it's been lagging the SPY, the DIA, and the Qs. But it still has its own point of resistance here at 200. So that part's the same. All the major moving averages are at a point of resistance. So again, don't get too excited yet that, hey, the bottom is in. Maybe it is, and that we're off and running. But you can see these V bottoms, and goodness, on the IWM, there's a classic example of a V bottom. I remember when I first started trading, I was told V bottoms don't hold, never trust a V bottom. But then over my experience of trading, 28 years and counting now, I've seen V bottoms hold. So I don't buy into that V bottoms never hold. But it's just something, it's a good talking point on the V bottom here, but we're back up at resistance here at the 200 level. So we'll keep an eye on that and see how that plays out. Now let's take a look at the dollar. The dollar has been very constructive, in my opinion, working very well. I was a little worried when we had this breakdown. We didn't want to lose the dollar. We still want the dollar to be viewed globally as the currency of last resort. And when we started to break down here, that was a little concerning, but now we've found some footing. We've held ourselves. Perhaps we're bouncing in a wave 4 here. I wouldn't want to see a wave 5 to the downside in the dollar. I would like to see this just kind of go sideways here. You've heard me talk about this numerous times, between 100 and 105 in that area. I think it's a sweet spot, the Goldilocks area, if you will, for the dollar, because it still shows there's belief globally in the dollar, but we don't want the dollar back up here because that's difficult in the exchange rate for companies that have international exposure. So the sweet spot is right in this area. I was glad to see this consolidation, but the longer we consolidate, the greater the chance is that there's going to be a breakout. So which way is it going to go? If it breaks higher, again, it's okay as long as it stays below this 105 level. But if we break down, I'll be a little bit concerned at that point in time. So let's move over to the bond market as we look at TLT. This is where there's a little bit of a fly in the ointment, but there's two schools of thought here on the way the bond market's been acting. This is the TLT. Remember, this is the 20-year, so this is prices. Prices and yields move inversely. So we've had a little bit of a move down in prices and therefore up in rates. Again, today, down in prices, up in rates, which makes the movements in the IWM and the Qs all that more impressive. So why are we moving back down? We had a breakout of this triangle, and now we've reversed it. When you break out of a triangle, you come back to the point of the triangle. We talk about that in the volatility strategy all the time since it's based on triangles. But are we going to start heading back down? And if we are, why? Is the bond market telling us it's still not comfortable? We're still worried about inflation, the potential for stagflation, the Fed's going to be late to the party, all those things that could be causing the bond market to sell off and rates to go up? Or when this big move happened here, was that just money going to hide in the bond market, short-term money running to hide, as we weren't sure what was going to go on with the equities when all the tariffs were announced, et cetera. And this is just showing that money is coming back out of the bond market to get ready to be allocated into the equities market. So there's two schools of thought here. Very difficult at this point in time to know which one is correct, but we'll have to wait and see. I'd be interested in your comments. Again, there's an opportunity to leave a comment on where you think the bond market may go. As we switch over to TNX, I know a lot of you like to look at that as well. So this is going to be the opposite. TNX, for those of you that are newer watching us, is rates on the 10-year, where TLT is prices on the 20-year. And we're getting a little bit of flattening out in the yield curve. So there we have this breakout. We need to see more of a move, but do we want to see that? I think we'd rather see this be a false breakout and head back to the downside. As far as the Fed fund futures, we just had the May Fed meeting. No cut there. Nobody really thought it was, although we had an 85% chance priced in back when the market was trading down here on the lows. And now, as far as June, very little chance that the Fed will cut in June. And we're only at 60+% for July. So when is the Fed going to cut? You know, we've talked about the ECB in the past. We talked about that in Trade Finder. I'll talk more about Trade Finder here in just a moment. But that's what's going on the opposite end there in the bond market. So let's take a look at what's been really hot lately, which is in the area of cryptos. Here is BITB. We're showing you optionable ETFs. So if you don't want to pay 100,000 and Bitcoin is back above 100,000, so those of you that are in the crypto world have been happy this week. But $100,000 is a lot for a Bitcoin. So here's a way you can create leverage and still trade in that market. We'll talk about MSTR later as well, which is a stock that's leveraged against Bitcoin, but a little bit overbought now on this move. A little separation from the 10-day moving average. Breaking above 52.5 was important. That was an area of resistance. And now we're moving up. We have more resistance here at 57.5 on BITB. So that's going to be an area where we have to watch. Maybe we get a little bit of pullback at the beginning of the week, but a big run in Bitcoin. And that brings up the question why. We're going to talk more about that in a moment. And then Ethereum finally joined the party. Look at that. For those of you that are fans of Ethereum, after this just dreadful start to the year on the big move to the downside here, going all the way back to January, all the way down to the lows here in April. Big move up, even in Ethereum. So it's been across the board on what's been going on in the Bitcoin space. So let's go ahead and take a look at the metals. As we look at the chart of GLD, talking about gold, I'd like to bring in, we have a special guest for the U.S. market update this week, the senior market strategist of Advantage Gold, Mr. Jeremy Blossom. We did an event together back in November of 2024. And Jeremy was saying, and then gold was trading around $2,600 an ounce at that point in time, that gold was going to go above 3,000 and more, extremely bullish on it. And gold had been a little bit quiet at that point in time, and he was spot on. If you've been watching the price of gold, you know it went up $3,500 range, and he actually thinks that we're going higher, and he has some new information for you. We're going to be doing another event together, which I will talk to you about in a minute, but at this point in time, I'd like to bring him in. Jeremy, how are you?
Doing great, Rob. Nice to see you again.
Good to see you as well. And boy, did you nail that call last time. So anybody that followed along with that event is a very happy camper with where the price of gold is. But I know you have some new information that you want to share with the folks, and we want to let everybody know that they have an opportunity to view this event as well.
Yeah, absolutely, Rob. I remember that event, and I told everyone then that this may be the last time you'll ever be able to own gold under $3,000 an ounce. And I said that because I said this exact same thing when gold was at $1,700 an ounce. I said that, hey, this could be the last time you're ever going to own gold under $2,000 an ounce. Now gold is approaching 3,300 and some change, and it hit 3,500, an all-time high at a record pace. And what a lot of people tell me is, well, gold's already done its run. Oh, contraire. Gold is just getting started. I think that we are going to witness the greatest gold and silver rally of our lifetime. And gold prices right now are at the deal of the century. You look back 100 years, you're going to be like, why did I not own more gold? Because gold knows. And what does gold know? It knows exactly what's brewing underneath the fabric of our economy. And there is no turning back. That's why I said gold prices were going to get above 2,000. That's why I said it's going to get above 3,000. And just recently, about 2 weeks ago, I flew to Harvard University to sit down with Ken Rogoff because he has a new book. And in this book, he talks about the dollar and what's happening to it. And he said it out of his own words, out of his own mouth. He said, Jeremy, what's happening right now just accelerated everything to a degree where I thought it was going to take 5 to 7 years. This is going to take 5 to 7 months. So this is how dire it is. And I'm excited to come back and talk to everybody and tell them exactly why and how they could take advantage of it.
Yeah, it's awesome. And for anyone that was watching the financial networks today, the CEO of Wheaton Gold was on, and they reported a record quarter, and he said, we're just getting started. So there you go, right from the horse's mouth of a CEO, backing up exactly what you said. And you talked about your sit down with the guy at Harvard, and I think you have a special gift for anyone that does attend this event. So talk a little bit about that.
Yeah, so this is the book that I wanted to get into everyone's hands. It was written by Kenneth Rogoff. He was actually the former chief economist for the IMF. He was an economist for the Board of Governors for the Federal Reserve. He's a Grand Master chess champion. And this is his latest book. It just got released this week. And everybody who comes, we're going to give a free copy. This is going to be a hardback copy. We're going to deliver it right to your address for coming, but you have to attend. And what's inside this book matters more than I think any other piece of literature you could read right now. If you're looking for the real wealth generating ideas, we all know that there's some short-term opportunities that can make us a little bit of money, but it's the long-term plays that generate wealth and a fortune. And that's exactly what he outlines in this book. I can't wait to go over it with everybody.
No, I can't wait to visit with you again. The last event was so good. We had a great time. And again, you were spot on. So I'm looking forward to hearing more detail behind the forecast, the book, etc. We'll be adding a link into this recording and under the recording to attend the event. It will be on May 21st at 7 p.m. Eastern time. Just a quick note, you do have to have a U.S. phone number, so make sure that you add that in, but make sure to look for that link. Jeremy, thank you so much for joining us for a quick snippet here of what people are going to hear on the 21st. I can't wait for it. Look forward to seeing you again, my friend. Thank you so much.
Likewise. Thank you, Rob.
Really great to have Jeremy with us today. I hope you all sign up for that event. It's going to be a great one. One final comment here on the chart of GLD is that we are going through a consolidation, and he's going to tell you that he thinks gold goes higher and give you some specifics on why. So you definitely want to attend that event. It's not one to be missed. a little bit of consolidation here on the GLD. And so is that the next breakout? Do we need to pull back first? Get the facts from the person that I trust in the gold market more than anyone else. You know, over time, you find the people that you like to listen to, and then you block out all the rest of the noise. Jeremy's one of the guys, and his track record is proven. If you were with us in that November event last year, you know for a fact that he was spot on. Let's take a look at the chart of SLV. Still waiting for this to play catch up, and I still think that it will. But respecting this triangle, again, one of the hearts of the volatility portfolio. Even Elliott himself said that when you see a triangle, you don't pick a direction. There really isn't a direction to pick here because we finished the wave 5 back in December of last year and been going through a bit of a consolidation. We recovered back to the previous 4. That's what's supposed to happen. So spot on with Elliott Wave rules. You go into a corrective pattern, flat zigzags or triangles. So we got a big triangle here on SLV. I would still tend to lean towards an upside breakout in SLV as silver tries to catch up. You know, it's been kind of tagged with the manufacturing in the technology sector. Silver is using manufacturing technology. But again, it's a pretty decently formed triangle. We had a little bit of a false upside breakout there. We didn't take out the previous high, so it didn't count as a breakout. And we're just consolidating here, waiting on silver to move. But you have to respect the fact that silver could break to the downside as well. So we got to keep an eye on that when we're dealing with the metals market. Let's move into energy, and we'll take a look at UNG. Still wondering if we could have this wave 5 impulse. That's been on the chart for weeks. Potential impulsive wave 5 move, where the wave 5 is up around 25 in the middle of this tap box, time and price projection, as evidenced by the Elliott Wave algorithm programmed into the Hub software. And if you're watching this and you haven't gone and gotten a copy of this, go to hubb.com. You can get a copy. It's free. Elliott Wave is free. There is an opportunity to subscribe to AI Signals. They're one of the market leaders. We have a track record that's been published, one of the early ones in that, but you can get a copy of the software absolutely free and Elliott Wave for free. You can see this wave 4 here going back to the chart of the UNG right here around that 78.6% level. We did break above the 50-day moving average today, so maybe we're back in running here. And I think that's an area to think about as far as the equities markets in general, because what had happened is that we had this big run up in UNG. You all know the story if you've been watching these for the last several months, is that all of these companies that are going to be building data centers, they're going to be run on natural gas. We didn't know how much natural gas was going to be used or how long it would take for them to build them. And then when we had this move down in UNG, that was because the markets moved down and some of those companies were saying, maybe we're going to hold off a little bit on setting up those data centers. Maybe we'll not build as many as we thought. And that ended the momentum run of the wave 3, but it gave us a wave 4 correction. And this break above the 50-day moving average means that perhaps it is time to look at natural gas, and maybe we do finish this potential wave 5 impulsive move. Looking at oil and in my travels over the past couple of weeks, I can tell you that there are a lot of cars on the road, a lot of vehicles, and we're moving into peak driving season. It's nice to see oil ticking down a little bit. We do have a little bit of move back up. We got back above the 10-day moving average in today's move. I still think this area between 60 to 65 and 80 is going to be the sweet spot. We came down and tested this, so we made the low here in April. We just tested it again in early May, and that's holding. You could actually draw a trend line here on these two higher lows, thinking that oil may move back to the upside. You are finally starting to see it. We've kind of joked about how when oil prices go down, it seems to take weeks or months to be realized at the gas pumps. But when it goes up, you see it the next day. And I can tell you on my travels, just this little bit of a bounce as I came back, you saw it the very next day at the gas pumps that prices ticked up a little bit. But all in all, prices have come down at the pumps, and that's just in time for the peak driving season. We now have OPEC plus, where you're adding Russia, et cetera. And I just don't think they want to let oil go too low. There are some forecasts of oil going down, the USO going down to 40. I would be shocked to see that. Sometimes people have ulterior motives. They talk their book, etc. I don't see that. That's not in my frame of mind. I feel like OPEC wants to keep the price of oil not too high. They don't want oil to get too high to where it encourages people to run back into electric vehicles, but they don't want it to break down too much because they know they have a limited supply and they want to make as much money as they can with what they have left in the ground. So we'll see how that plays out moving forward as well. Now, as we start to move to stocks of interest, we're going to start off with SMCI and looking at that. That brings me to something that we've talked about. When you see SMCI coming back down, Trade Finder, we do this every single week on Tuesdays at 1 p.m. Eastern time. And we actually had a bullish case study consideration during Trade Finder. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a great community with Trade Finder. You can interact with each other. You can ask questions at the end, but we did have a case study where we caught this upward move. I really thought we were going to go up to 40, but we had such a nice bounce with a gap up. IV was added to the calls. We took it off. You can see that in the community area on the software. Again, going back to the Hub software, there's a social media aspect to it, and you can follow along with what the Trade Finder case study considerations are. But you saw the link on your screen. Sign up for it, again, every Tuesday at 1 p.m. Eastern time, and it's free. Love to have you join us. So we caught this move. We closed it out, and boy, that was spot on as we've come back down and are looking to test support here at the 30 level. So a bit of a false breakout here, and I think if you're looking at a triangle, and sometimes people make comments, I don't agree where you draw your trend lines. Well, I'm not that picky on where they are. I just want to see, are they showing consolidation? But the fact that the breakout didn't take out these highs from March means that really all we've done is extend this, and we have a larger descending triangle on SMCI. So we still could get a very significant breakout on SMCI, and it's still possible that it's a downside breakout, but an upside breakout with the size of this triangle. SMCI at some point is going to make a very sizable move, and we're on it. We're watching it. We'll talk about it each week, and we'll be a participant when it makes its move. So keep an eye on that as we move forward in Trade Finder and with SMCI. I said I would mention MSTR, another way for trading Bitcoin. They've leveraged their entire company. I'm sure you're aware of it by now. They've done debt offerings. They've increased their float. They've done everything they can to buy more Bitcoin. And Michael Saylor is just a big believer in it. The break above 400 is intriguing on MSTR. So that was resistance. We had a nice run. We're a tiny bit above the 10-day moving average, but not that significantly so. We had the triangle. It broke down. We came back and tested it. We broke down. We found support at 250. And now with this renewed bid in Bitcoin and the cryptos, it's back to the upside. So I think if you want to be bullish on MicroStrategy and you don't like those ETFs that I showed you earlier, here's another way that you can get involved in the crypto space without paying 100 plus grand for a Bitcoin. More stocks of interest that you like. I know you like Palantir. So let's take a look at Palantir, PLTR. And the CEO of Palantir was in that investment conference that I mentioned earlier this week. We had a little bit of a tip down. They had a good earnings report. It was very solid. Wasn't a blowout quarter, but we had a nice run up into it and ran into resistance there where the previous wave 3 was in February, right at 125. I think if you want to, if you're not in Palantir now and you want to look for an entry, I would think let's wait until it breaks 125. We are back above the 10-day moving average, so we recovered that gap down rather quickly, filled the gap here yesterday. But I think for a new entry, you want to see it break 125. If it does, wow, it could be off and running. Look at that clean air that we're in, using the racing analogy. When you're racing out front, your engine runs cooler. You don't have all the exhaust and other things from other cars. And when stocks break resistance and they don't have any other resistance in the clean air, they can really take off. Palantir could really run here if it can break 125. But let's let it do that first. So we're right in a range here now between 100 and 125. So we want to see that breakout occur before we get too excited on trading Palantir. NVIDIA. looking pretty interesting here. You can see we've had this large symmetrical triangle, and it looks like, at least at this point in time, that perhaps we're trying an upside breakout, but it's not enough again. Perhaps that could be a false breakout still. What would make it feel more concrete on an upside breakout is a break above here in this 120 range. If we break above that level, then I think you can call this a confirmed upside breakout, but it's just not been significant enough to call it that yet. You can see the 10, 30, and 50-day moving averages all converging here with this long consolidation that we've had in NVIDIA. But a break above 120, I think, becomes really interesting. But as you're noting, all of these things that we're looking at have one thing in common. They're all against resistance. So we are in an area where everything could fall apart on a bad headline or some sort of bad economic news, or we break above resistance, and then we can feel more comfortable with being more aggressive on a risk-on type environment. Microsoft had a great earnings report and took off. We had this big blowout move in Microsoft, and it ran right up to its own resistance area going back to December. Then again, tested in January, just under this 450 range. So I think if you want to go long Microsoft, you do want to see it put some distance above 450, and then it's in that clean air and could really run. That's on my radar screen. I'm watching this rather closely. You can see we've had some nice consolidation following this big move up on earnings. So we'll see if we can consolidate here, gather some more energy, and take off with that wave forward 89%. That's a disqualified 5-wave pattern, and it will disappear in the algorithm here pretty soon. So Microsoft, something pretty interesting to look at. Let's take a look at Apple. We take a look at that chart, and not been playing well with others, if you will, in the technology Mag 7 space that has had a bid. We actually have a very well formed from a symmetrical standpoint. Look at that 5-wave pattern to the downside. It doesn't get much better than that. The symmetry, which I like in an Elliott Wave pattern, in addition to a downside zigzag that played out well in the wave 3. Again, that's what we look at in the AI-based impulse strategy at ewotrader.com. We're still below the 10-day moving average. And if we continue to head lower, I think that level around 150 on Apple could be achieved. So not a bid in Apple like you've seen in some of the other stocks moving to the upside. What could change that for me? Not just to break back above the 10-day moving average or even the 50-day moving average. We need to take out that wave 4 high. And then if it does that, then we could be looking at 225 as the next resistance. But for now, you have to respect the fact that Apple could just continue to move its way down. As you've heard me say in the past, Apple is the one stock that I'm nervous about ever shorting because they have so much cash and they can initiate a stock buyback at any time, and not just a small buyback. They can buy back tons of it. So unless you're in the board meeting, you don't know exactly what price they would be looking at. Obviously, they haven't done it yet. Would it be 150? Would they wait for it to come down there and do a big buyback, or would they do it sooner? But be a little bit cautious on Apple at this point in time. Looking at Tesla, as we take a look at that chart, nice breakout move today. Can we follow that through on Monday? You can see that if I expand the chart, that we did close well off the highs, but we did break above that 300 level, closing at 228. So we want to see some follow through with a close above 300 on Monday. If we can get that, I think we're headed to 350 on Tesla. Then we have to reevaluate. We'll see about that in the coming weeks. But for now, breaking up, and look at all these triangles here on Tesla. We had this symmetrical triangle, broke out, form another symmetrical triangle, broke out, and all of those triangles forming this large ascending triangle. Now, an ascending triangle, remember, does not mean an upside breakout. Any triangle formation can break either direction, ascending, descending, or symmetrical. It just means that we've had an extended period of consolidation here in Tesla. We got a little bit of a bump when Elon said he's going to wrap up his duties with Doge and move back to focusing on Tesla. But the key here, can we get follow through on Monday with another close above 300? And if so, again, I think that we're heading up to that level there of 350 on Tesla. So that'll be the key to watch there. And to look at a stock that has really been on fire, Netflix. Look at that. You can view that a number of different ways. They're killing it in the streaming space. They're the leader. And then if you are worried about a weakening economy, if you remember back during the COVID days when everybody was staying home, Netflix took off. We've broken above resistance here in the 1,000 level, right through there in that ascending triangle pattern that we had. I'll move that trend line of higher lows back there. Nice breakout. We're about at the point where the mouth of the triangle would say that we're going to move. So a little bit of consolidation here on the way through. A little bit of separation, too, between the 10 and the 50-day moving averages. I watched that. We might be a little bit overbought on Netflix. It's been one heck of a run, but maybe we need some backing and filling here. Maybe even come back and test those February highs back here around 1050. I think could be warranted there. Be really hard pressed to tackle going long Netflix at this point in time. You look at the DMI and the ADX is well above it's still going up and it hasn't reached 40. So the purists on the DMI would say, hey, we still have some room to go. You go back and look at it when it was back here in February in the 40 area and then pulled back. That's what you normally expect. So does the ADX go back up there? But we do have the positive directional indicator below the ADX, but we did back here as well when we ran up. So there could be a little more to the upside on Netflix, but I'll be a little bit more cautious about going long Netflix at this point in time. Again, I would love to see a test back down. Doesn't have to test the 50-day moving average, but a test back down to that support level around 1050, I think would be quite interesting. Looking at Google, so we're adding in a lot of stuff since we were off the last couple of weeks. So a little bit of a bonus session in this recording here. Google holding in that 150 range. I think you can be constructively long Google, but they have so much regulatory stuff going on. They're really putting heat on them to break up the monopoly and all that kind of stuff. So you have to be concerned about that. But the risk to reward here, if you wanted to take a shot, if you had speculative money laying around and you wanted to do something from that nature on a stock that hasn't caught up with the rest of them, Google would be a good one here, I think, because a break below 150 and you're out. That's your stop. And we're trading at 152. If you break up, we could come back up and test this resistance area here in the 170 range, maybe slightly lower than that, right around where that wave 4 is. Also a well-formed 5-wave pattern to the downside, which we have to respect. But again, it's a speculative trade. And if it holds this 150, you could get a nice gain up to 170. But it breaks 150, then you're out rather quickly there on Google. And last but not least, let's take a look internationally at the Nifty. I know we have a lot of viewers that watch from India. We have a lot of subscribers from India at ewotrader.com as well. And we had this move here. The wave 5 ended at 124%. So we were looking at a 61.8% correction, not back to the previous 4. The wave 5 extends more than 100%. You only look for a bounce to 61.8. We hit that, came back down, but we did make a higher low. We've drawn that trend line a few weeks ago. Had another nice run, kind of double topped here a little bit. I thought we might actually make it to the 100% extension, and maybe we still do. But we did back off and test the 50-day moving average once again. So I think right now, just kind of sideways to slightly bullish is what I would be looking at on the Nifty, the NFTY for the equal weight 50 on India. And perhaps we do go back up to that 100 level, which coincides with that previous wave 4. So again, thanks for all the comments. Glad you missed me while I was gone. Happy to be back and sharing information with you. Again, make sure that you sign up for that seminar with webinar with Jeremy and myself talking about gold and how you can put it in your IRAs, 401ks. Everybody should have some sort of gold in their portfolios. I've always been a believer of that from a diversification standpoint. Thanks again for your attention. Have a great weekend, everybody. Look forward to talking again soon. Take care.